This is Colin O'Keefe for LXBN TV. The IRS recently rolled out its rules for regulating Bitcoins, and the reaction has been mostly negative. But this isn't all bad. Joining me now to explain why that's the case is attorney Jason Weinstein. He is a partner in Steptoe Johnson's DC office, and he is an author on the firm's blog, the Steptoe Cyberblog. Jason, first, let's start as you did in your post on this subject with the bad side of things. Why has the reaction to these new rules around Bitcoins been so negative?
Well, first, it's appropriate that we're talking about this so close to tax day, since the ruling was about the tax treatment of Bitcoin. And as most people know, what the IRS decided was that since Bitcoin is not a currency that's recognized in any jurisdiction, it will not be treated as a currency for tax purposes. Instead, it's going to be treated as property, which means it's subject to capital gains taxes. So what's the bad news? If your glass is half empty on this kind of thing, then you would view this as a negative. And the primary reason is because it could be a practical obstacle to being able to use Bitcoin in everyday transactions. If you pay for a product or service, dinner at a restaurant or a product at a retailer with Bitcoins, you're now going to have to pay tax on the increase in value from the date you acquired that Bitcoin to the date you spent it. And that means that you have to be able to keep track of what you paid for each Bitcoin. And you may have paid very different prices, given how volatile the price can be, if you purchase those Bitcoins at different times. So ideally, you're going to try to use the one that results in the lowest gain at any given time. It's kind of like going to a store or a Chinese restaurant and paying for your meal with shares of stock, trying to figure out which share gets you the smallest capital gains. That's not an easy thing to do. And one of the main reasons why people were drawn to Bitcoin in the first place is because of the perception that it's easy to use. And so if your glass is half empty, you'll view this as undermining that ease of use. In addition, there are some related reporting requirements that people who are attracted to the potential anonymity of Bitcoin would view the reporting requirements as undermining that as well.
I see. Yeah, the ease of use has been a big plus for Bitcoin, but this does change things some. So second, let's move on to the glass half full perspective. You raised some interesting points around this. Why are these new rules on Bitcoins really not all bad?
Well, if your glass is half full, then you're going to view this as another step toward legitimacy for Bitcoin. Recognition by yet another government agency that Bitcoin is a real factor in our economy, both as an asset and as a medium of exchange. Last March, almost a year ago, actually a little over a year ago, the Financial Crimes Enforcement Network released regulations about how the money services business, like money transmitter business rules apply to Bitcoin, and now you have the IRS. And so those who are looking to invest in the Bitcoin ecosystem would view certainty regarding how Bitcoin is going to be treated by regulators as a good thing, as a significant piece of information. And so if you're looking at the long-term stability of Bitcoin, you're going to view regulation as promoting that stability. And some smart app developer, if they haven't done it already, is going to figure out a way to automate the calculation I just talked about a minute ago so that fairly seamlessly people can do their capital gains calculations and still be able to use Bitcoin without getting a calculator and an accountant to help them do it. And if you hold Bitcoins for investment, you might even focus on the fact that capital gains result in a smaller tax than if it were taxed as currency. So if your glass is half full, you'll focus on that as well.
Definitely. It's not ideal for some, but it is still a big step forward. So to wrap this up, to conclude, what do you think this all means for the future of Bitcoin?
Well, it depends on who you ask. Warren Buffett is perhaps the highest profile skeptic of Bitcoin. He referred to it recently as a mirage. And he's right a heck of a lot more than he's wrong. So when he speaks, people should listen. On the other hand, there are a lot of other very savvy, very successful venture capitalists who are pouring money at significant quantities into Bitcoin and betting big that it's anything but a mirage. And more retailers, seemingly every week, are beginning to accept Bitcoin as a medium of payment for their customers. So the fundamental catch-22 of Bitcoin is that the more regulation, as I said before, means more stability and improves its long-term prospects, but the very fact of regulation may drive away some of the people who adopted it early because it was unregulated. My bet is that the glass half full people have it right, and that it's not a mirage, but it's something that's going to continue to be a force in the economy, and a growing force in the economy over the coming years. But like other people, I don't have a crystal ball, although I bet you could buy one using Bitcoins.
Definitely. It's going to be interesting to watch. As with any new innovation, there's bound to be some growing pains, and this can definitely, I think, fall under that. There's some good, there's some bad, but overall, it is, again, a big step forward. Once again, that was attorney Jason Weinstein with Steptoe Johnson. For more of his insight on this topic and other topics in privacy, cybersecurity, and technology, be sure to visit steptoecyberblog.com. Thanks for joining me today, Jason.
Thank you, Colin.